and welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. And after seeing a choppiness and volatile session last week, the reflection of those choppiness is visible this morning. As I speak to you, friends, Sensex is down about 325 odd points at 57,050 levels. Nifty is down 95 points at about 17,060. And the Nifty Bank is down about 160 odd points at about 35,250. This could be a choppy week as well, given that we are in the FNO expiry week. So as we approach the FNO expiry, expect choppiness and volatility to be at a higher side. Crude oil prices, after seeing $120 a barrel on the Brent, crude oil prices have cooled off to $117 per barrel for the Brent and about $110 per barrel on the NYMEX. The rupee dollar equation is about some amount of stability. 76.37 is where the rupee dollar equation is. But the concern will remain as far as India is concerned, given the fact that elevated crude oil prices do not augur well. But remains to be seen how do we secure our energy requirement like we did last time. We did buy Russian crude oil at a discounted price with ruble rupee equation, and how much of that we are able to procure it remains to be seen. And along with that, what are the developments as far as the Iran nuclear deal is concerned? As we all know, Iran is also one of the largest producer of crude oil and natural gas, and with Iran as well, we have a very strong bilateral relationship. So in this kind of choppiness and volatility, expect manufacturing services to underperform all those sectors which are interlinked to crude oil prices, given the price hike. And of course, on the domestic front, also retailing of petrol and diesel prices have increased for 6 consecutive days after increasing it for bulk users. How much of more we have to see in praise of price hike remains to be seen. But my sense is that services sector would relatively have a lower impact. So you have sectors like IT, banking, financial services. Some sectors in the manufacturing side like specialty chemicals could do well. So try to look at banking, finance, insurance companies, diversified financial companies, housing finance companies, real estate sector as a contrarian call with a clear-cut view that this is a high beta sector, but there is visible improvement in terms of the demand for commercial and residential properties. For those who have a little bit of high risk appetite with a clear view in mind that the choppiness and volatility will continue for sectors which are interlinked to crude oil. So you have sectors like auto companies, FMCG companies, consumer durable companies, paint industry, to name a few, tire manufacturing companies, aviation sector. For those who have high risk appetite and those who are willing to look at buying contrarian view in mind and a long-term time horizon with high risk appetite can definitely look at strong names with price correction valuations becoming attractive. You can definitely look at large cap companies in autos, in paint manufacturing company, and FMCG companies, and consumer durable companies, aviation sector, something like an Interglobe Aviation. Of course, as a disclosure, we have a buy recommendation over there from a long-term point of view. And of course, tire manufacturing companies which are closely linked with auto sector. Wisdom prevails and says that when you have a little bit of high risk appetite and want to take a contrarian call, there are reasonably number of companies with strong balance sheet and management in these sectors you should look at. Otherwise, IT, banking and finance, diversified NBFC companies, insurance companies is what you should possibly concentrate on. With the announcement that was made by Accenture, the expectation is that the IT sector overall should perform well. And if you have to reflect upon the earnings gone by and the verbatim from the management, that also speaks that the growth is here to stay for a longer period of time. So those with low risk appetite should look at IT, banking and finance, insurance companies, housing finance companies, real estate sector, and specialty chemicals from the manufacturing side, given the opportunity that lies ahead. FNO expiry will lead to a lot of choppiness and volatility, so need to bear this in mind. And how much of impact does India have to take in with rising crude oil prices is also remains to be seen. Earnings for these companies which are linked with crude oil prices will not have immediate impact in the fourth quarter, But the next financial year, first, second quarter, depending upon where the crude oil prices are, we should possibly be able to gauge the impact of it. But definitely, short to medium term, all those sectors which are associated with crude oil can see a little bit of degrowth and earnings coming at a lower level than expected. Thank you very much for your patience hearing. I'll see you again next week. Till then, take care. Bye-bye.